Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como. I'm with Ireland Como Lafoy. Today is the 22nd of July. Today is a kind of a wheat or a spring wheat special for all of us Western Canadian farmers, or for all Western Canadian farmers. But first, let's get into what the broader markets did today. Canola was down $4.10 to 6.90. Minneapolis wheat was up 3.25 to 6.11 and 3/4. That's what we're going to focus on today. Kansas wheat up 7.5 at 5.33 1/4. Chicago wheat down 7.25 at 5.49 1/2. Beans were down half a cent at 10.25 1/2. Soybean oil was down 43 points at 55.39 a pound. Corn was down 4.5 cents today at 3.99 1/4. So just under the $4 mark now for September corn. The Canadian dollar rallied really well today, 73.49. Live cattle took a little bit of a breather today, 221 and an eighth per hundredweight. Feeder cattle up 67.5 points at 328 1/4, roughly. All right, let's get into the spring wheat market. Now, if you have been following this commentary, you probably have heard me talk about 605, 605, 605 on Dees Minneapolis. We have now tested that level essentially. I think it got down to 608 or something along those lines. We are starting to see a rebound, or we did see a rebound today. So the question is, has spring wheat bottomed? And can we confidently expect to see higher prices from here, or at least some stability in prices from here? I'm going to give some arguments perhaps on both sides of the equation. Now, first off, let's take a look at the moving averages, which is something that I take a look at quite a lot. This red line over here is the 20-day moving average. The yellow is the 200, the green is the 100, the blue is the 50, etc. Generally speaking, when moving averages are crossing each other, that means that there is momentum building, perhaps momentum changing, or momentum continuing. What this signals to us right now, because the 20-day moving average has broken down below the 200 and now down below the others, is that momentum is still working against December Minneapolis wheat, or at least Minneapolis wheat at this time. The momentum, according to the moving averages, is still skewed towards the downside. Now, what does that mean for some other technical signals? Now, this is the relative strength index, or RSI. It is showing, generally speaking, what we're looking for in this technical indicator is when the market moves to these lower ends of this range and then starts to cross back over each other. So when the green line here crosses above the yellow line, that's a positive sign that maybe momentum is shifting. That may be short term, that may be temporary, but we are, it's essentially signaling to us that the market is oversold and maybe due for a bit of a correction here. Now, the moving averages, as we showed in the previous chart, may still be in place for the higher or for the longer term, but the relative strength index is showing us that we are a little bit oversold at the moment. That may result in a little bit of a rally. These are Bollinger Bands. They essentially signal volatility. They widen out when volatility becomes greater, and they contract when we start seeing volatility risk, contract itself. Here's what we're seeing right now is that the Bollinger Band on the high end has not really expanded very much, but on the low end it has. It is starting to hug this Bollinger Band here. Generally, the rule of thumb here is that if it touches or breaks through the Bollinger Band, it is also considered oversold. So when you kind of combine that with the fact that there is support here at 605, the RSI looks oversold. Farmers generally close the door when they see a 5 in front of the Minneapolis wheat price, like we're seeing on the September right now. There's probably not a lot of farm selling happening here. Unfortunately, maybe that will change as we move into harvest and there's some forced selling. But right now, I think the bin doors are relatively closed. So we could be in for a bit of a correction here overall. A little bit more here. The December Minneapolis wheat is not. So this is the commitment of traders, the managed money positions. It's disaggregated, and I've focused on only the managed money. So that would be speculators, funds, things like that. They basically got to a zero position here on Minneapolis wheat, which means they were basically neither long nor short. but they are near the top of the range for the next little while. So they could potentially sell this market short now, or as it gets close to zero, if there is going to be a pivot, if we start to see it move into a positive or a long position, that may signal that the market is changing as well. Of course, this indicator is very, very delayed. This data would have been released on Friday of last week. So it would have been released on the 18th, but it would have been data valid on the 15th. So it's not a good leading indicator by any stretch. It's more of a confirmation indicator than anything else. But if the market can start to, continue to kind of muster some strength and we move into a positive, that may mean that the market is looking to take this long. Now, if we look at the supporting markets like the winter wheat markets, for example, we are seeing some bottoming action happening here as far as a test of support, down near 518 on the September Kansas wheat. We've seen a couple of up days here, a couple of pretty strong up days here. We've broken now above the 20-day moving average. That's a pretty decent sign, although this market does kind of ratchet around the 20-day moving average quite a lot. Still, it's a mildly bullish sign, particularly when you combine it with that test of support. We have now gotten through the slog of winter wheat harvest, or at least hard red spring harvest. So that's also a positive. Here's Chicago wheat. We are seeing some of that same kind of pattern happen here as well. Now, the low in this market is still, around 520, but we have seen some, 535, a number of tests at the 535. So this would be maybe more minor support. This would be more major support that would signal a lower low. Right now, it's kind of been range bound in the last little while. It's starting to break above the moving averages here now. I think that's a positive overall sign as well. Just looking here at the spreads as well, which I think are important. Spreads moved up to about a dollar 11 in the first couple weeks of June. That was pretty high for at least historically for these two. This is the September versus September that I'm comparing here. So it got pretty high. We saw premium kind of get priced into the market here as the acres and then the early crop conditions were poor. So the premium to Kansas from Minneapolis, grew to about a buck 11 at the peak there. We're back down now towards the 58 60 cents a bushel. So it has backed off as the crop condition ratings for Minneapolis have improved somewhat, and the whole S&D both on both sides of the 49th parallel appear to be a little bit looser and a little bit more comfortable. So those spreads came off, which is a good sign because those are more normalized now. So we may see Minneapolis trade a little bit closer to the winter wheat classes going forward. And that may be a good thing if the winter wheat classes are going to correct in the next little while. All right, that is all we have for you today. I know that was quick and it was focused solely on Minneapolis wheat, but I don't really think I've put a lot of attention on that yet. If you want to get our premium content, which includes weekly reports, ad hoc reports, morning commentaries, and the videos all sent directly to your inbox, go to canadianagmarkets.com/subscribe. We'll have that link in the description below for you to do. Thanks for joining us. We'll see you tomorrow.